my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bearish black crow yesterday, but also a possible hanging man pattern. This coming as it did after Friday's bullish opening white Mariposa. The market was capped for a second session by the upper time, currently 70.56, of the December 2020 to late January 2021 bullish shift pitchfork. Meanwhile, below we have the top of the old broken rising wedge pattern, currently at 69.43. For the moment, I've also kept the achieved topside targets. Target X in the 70.10 area, the target for the January to March sideways triangle, target X1 in the 70.95 area, the initial target for the late January, early April rising wedge pattern, and target X2 in the 71.15 area, the full target for the rising wedge pattern. The reason why is that the market is hanging so close to them. I suspect they may become more interesting and possibly give an idea of direction and size of move in the days to come. Further overhead, we have the high of last week, the first of the lesser projected Fibonacci levels. In this case, the 38.2% projected Fibonacci level at 71.42. So far today, a small attempt higher, up through the upper time, but then swiftly coming back down again, looking like a possible bear spike and maybe even an indecisive spinning top as well. German DAX futures. A higher but still indecisive spinning top yesterday. A somewhat disappointing action given the fairly rare pattern we've seen over the last 2 weeks. That's a compound weekly key reversal up. This is a rare pattern, and I think I may have seen only 20 or so in my lifetime, is when a weekly key reversal up, or down, but in this case up, when a weekly key reversal up is outdone by a larger, encompassing weekly key reversal up. Well, I'd like to look upon this as a superior bullish indication, but yesterday's move, though higher, was limited. Anyway, the potential is still there for a try higher, possibly towards target X1, the 15,800 area. A more recent topside target for the small diamond continuation pattern, especially after last week's dip down to the removed target X in the 14,800 area. That was the downside target for the diamond when it was the diamond top pattern, and also the swift move back up after it. Overhead, we still have the recent all-time high at 15,529, but I suspect the projected 50% Fibonacci line at 15,629 may be a more serious overhead threat. So far today, higher open and move higher still, enough to make a new all-time high, if only just, for a pullback down to look like an indecisive doji cross right now. US E-mini S&P futures. A bearish black crow yesterday, caught in between the overhead projected 50% Fibonacci line at 41.83 and the broken lower time, currently 41.45, of the December 2020 to early February 2021 bullish Andrews pitchfork. A little above, we have the projected 100% Fibonacci line at 42.02, whilst below we have the Fibonacci congestion at 41.10 and 41.08. Now, none of these addresses the really big issues that we've had over the past 2 weeks. 2 weeks ago, we had a big weekly key reversal up. Then last week, we had an immediate countering weekly key reversal down, only halted in its fall by the rising short medium moving average, currently at 40.76. Does this mean that the first bullish weekly key reversal is cancelled and superseded by the second larger bearish one? The answer is yes and no. I'm sorry to sound obtuse, so I'll explain in more detail. On the surface, it does show a stronger bearish pattern has overcome a quite strong bullish pattern immediately, which is the key point. For those who like their answer simple, there you have it. However, the true answer is more complex. What it shows is the depth of indecision this market has undergone since early April. Hence I would say it is indecisive, contradictory, purely because of its unusual nature. Personally, it would not surprise me to see something like a bullish harami this week, or some lesser similar strength weekly bullish pattern of some form to be a counter to the counter. This is one worth watching carefully, even more than before. So far today, a fresh try higher, but still caught between the broken lower tine and the projected 50% Fibonacci line. French CAC 40 futures. A bearish black crow yesterday, though a small one, closing back down below the lower tines of the December 2020 to January 2021 bullish Andrews pitchfork, currently at 63.84, and the new late January, late March bullish shift pitchfork, currently at 63.93. The utility of these two bullish Andrews pitchforks is seemingly coming to an end. The market nevertheless tested down to the support of the projected 50% Fibonacci line at 63.48, but backed up and away. All this action is in the frame of last week's weekly key reversal up, for which yesterday's action is a somewhat disappointing move. I'll just leave you with this, as I've said for the last 8 weeks now, and I quote again, all is moot until prices move out of those tines, end of quote. So far today, gapping higher open, new all-time high. But this has not been sustained as prices have moved back down towards and edging through below the lower tines again. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.